Breaking news out of the tech world: Apple is slashing iPhone 17 prices in China, and the timing could not be more strategic. That's right, the Cupertino giant is cutting costs on its latest flagship lineup ahead of China's massive 618 shopping festival, one of the biggest retail events on the planet, and this move is sending serious shockwaves through the global tech industry. Let's break this down, because there is a lot happening here. The 618 Shopping Festival, for those who don't know, is China's mid-year mega sale event, originally launched by JD.com back on June 18, hence the name, and it has grown into an absolutely enormous commercial battleground worth hundreds of billions of dollars in consumer spending. We're talking about a retail event that rivals, and in some years surpasses, Black Friday in sheer scale. Major brands fight tooth and nail for consumer attention during this window, and Apple has now thrown its hat firmly into the ring with these price reductions on the iPhone 17 series. Now here's where things get really interesting. Apple cutting prices in China is not just a sales tactic, it is a direct signal of how intensely competitive the Chinese smartphone market has become. Huawei has been mounting an extraordinary comeback. Xiaomi is surging. Vivo, Oppo, and Honor are all breathing down Apple's neck with aggressive pricing and increasingly impressive hardware. The Chinese consumer has never had more domestic options, and Apple knows it. The iPhone 17 lineup, which Apple launched with its usual fanfare and premium pricing strategy, is now being repositioned in the world's largest smartphone market to compete more aggressively on value. These price cuts, specifically targeting the Chinese market ahead of 618, suggest that Apple's internal data is showing something important: that premium pricing alone is no longer enough to maintain market share in China the way it once was. This is a significant departure from Apple's traditionally rigid pricing posture. For years, Apple resisted aggressive discounting, leaning instead on brand prestige and ecosystem lock-in to justify its premium price tags. But the competitive pressure in China has clearly reached a tipping point. When you're looking at a market where local brands are delivering flagship-level specifications at dramatically lower price points, even Apple has to respond. From an investor perspective, Apple shareholders will be watching this very closely. On one hand, price cuts could boost unit sales volume in China significantly, and China remains one of Apple's most critical revenue markets, historically accounting for roughly 17 to 20% of total revenue. A strong 618 performance could meaningfully lift Apple's quarterly numbers and inject some much-needed positive momentum into the stock, which has faced its own turbulence amid broader macroeconomic uncertainty and ongoing trade tensions between the US and China. On the other hand, investors will be asking the harder question: what does this do to margins? Apple's profitability has long been the envy of the hardware industry, with gross margins that competitors can only dream about. If price cutting in China becomes a sustained strategy rather than a one-time promotional play, that could begin to nibble away at the premium that investors have priced into the stock. The broader story here is really about Apple navigating a new reality in China, a market that is simultaneously one of its biggest opportunities and one of its most complex challenges. Geopolitical tensions, domestic competition, shifting consumer preferences, and now the pressure to compete on price. Apple is threading a very complicated needle. One thing is absolutely certain: the 618 shopping festival just got a whole lot more interesting, and every Apple competitor in China is watching this price cut with very careful eyes. The real question is Apple adapting to win, or is this the first sign of a deeper struggle for relevance in the world's most competitive tech market?